3/4 of the people we spoke to in Switzerland this year say the responsibility for funding retirement is increasingly landing on their shoulders.
So David, Natixis Global Asset Management released its global survey on individual investors. What were the main findings and what's your overall conclusion of the data?
Well, we're finding that in general, investors are very cautious, they're conflicted, and they're confused, and they really want some help. And we really see three key trends coming out of the research. The first is that individuals want high returns, but they maybe can't stomach the volatility and risk that comes with it. And by that I mean individuals are telling us they want in order of 9.5% returns, but when you ask them how they are as investors, more than 3/4 say that they're cautious, and almost 80% worldwide are telling us that they would take safety over investment performance. So very difficult. How do we help them kind of reconcile those feelings? The second piece of it is that we're finding is that individuals maybe need to flip retirement on its head a little bit. I think individuals have been stressed to think about what number they need to save each year, how much they need to save. And really what we're finding is it would benefit people more to think about how long does that money have to last, and what are the risks that are going to be put in front of them as they try to monetize, how they try to annuitize the savings that they have. And then the third, we're finding that there's some significant disconnects in what individuals believe to be the benefits of passive investing and really what they can actually do for them. So for example, we see about 60% of individuals telling us that passive investments certainly cost less, but at the same hand, they're taking that one benefit and extrapolating it into other benefits, telling us that these investments are less risky, that they'll protect them on the downside, that they'll give them better opportunity, when it simply isn't true. You know, an index fund by nature or a passive investment by nature has no risk management in it. So you need to think about the physics of it. If you're going to get market returns, you're also exposed to market losses. We think those are the challenges for investors this year.
And what about Swiss investors? Do they have any trends we should pick up on? And do they share the same fears as other investors around the world?
Well, I'll tell you, one of the things we see is Swiss investors over the long term, we've watched as their return expectations have gotten higher, starting maybe around 7%, now moving into 9.5%. But at the same time, the level of risk that they're willing to take is decreasing. So we're seeing that they're more prone to want safety out of their investments. It's very difficult to rationalize that. How do you reconcile those competing feelings? What we think is individuals really need to stop and think about risk first. They need to really consider how much are they willing to put out there. And when we start talking about returns of 9.5% above inflation, we're really talking about real returns that are in the order of 11 to 12%. Now, to do that, you're going to have to really be exposed to equity markets and the volatility that comes with it. And odds are, based on what we see in their beliefs about safety, most people aren't going to be comfortable with it. So we think start with what's the level of risk I'm willing to accept, and then use that to back into what your returns should be or what you think they should be.
Okay, and how do Swiss investors feel towards retirement security?
Well, that's a big issue globally. And one of the things we track on an annual basis is the Natixis Global Retirement Index. And Switzerland generally ranks among the highest for retirement security, either number 1 or number 2 each year. Now this looks at monetary policy, it looks at fiscal policy, it looks at retirement policies in place at the government level, quality of life, a whole range of issues. So we see that even though there's great system behind them and great infrastructure to support individuals, 3/4 of the people we spoke to in Switzerland this year say the responsibility for funding retirement is increasingly landing on their shoulders. So the good news we see in this is that individuals feel empowered by it. They do feel that they're optimistic about meeting those goals. But the challenge is thinking about to that idea on risk is how do you actually manage your money effectively so that you can fulfill that obligation you have, that liability in front of you, which is 10, 20, 30 years of retirement. So we think that's an issue for everyone to be looking at.
And how do you think investors can address all these challenges they're facing?
Well, we look at the world through this idea of durable portfolio construction. And really, it's risk-oriented. It's the idea of thinking about the risks that are out there first, and then making smart decisions about how you approach solving the risk problem. So we think that, the idea of a 60-40 stock and bond portfolio has to really evolve. And we see that from investors. They are looking for better solutions for managing risk. They're looking for better diversification. They're looking for a range of solutions that'll get them out of the cycle of things they've seen. So we try to talk to people about approaching it from new ideas. What can I do with alternative investments that would help diversify my portfolio? What can I do with traditional asset classes that will give me benefits and opportunities beyond just what we might traditionally think from a stock or a bond? And we also think in terms of being consistent, having an approach and a philosophy, in our case durable portfolio construction, that can really help set a course for how you approach the markets over the long term. I think it's important to have that kind of grounding in place before you start approaching the markets and getting exposed to the risks that clearly investors don't want.
Thank you, David. It's been a pleasure speaking with you today.
Thanks for having me. I appreciate it.
That's all for today, but you can get the latest business updates by following us on Facebook or by downloading our app. Goodbye for now.